Welcome back to Portfolio, everyone. And today we're going over Virgin Galactic's Q2 earnings and taking a look at why the stock dropped 13.7% on the single day. And of course, we're going to evaluate how the company's performing, and with this single day dip of close to 14%, if this makes it a nice buying opportunity to get into Virgin Galactic right now. We're going to go over their Q2 earnings report, talk about some other big news headlines around the company, and overall determine if now is a good time to buy this stock on this massive dip, and if we see some upside potential in the company moving forward. So thank you for tuning in to today's video, everyone. I'm the Gen Z investor, and if you're new, I post videos about the stock market every single day on this channel. We talk about different stocks you can buy for your portfolio, overall stock market performance, and any other big stock market news and headlines. So today's video, we're going to break down Virgin Galactic's Q2 earnings report, go over what set this stock down 13% on a single day, and overall determine if now is a great time to buy the stock because of this massive dip. So if you aren't familiar with Virgin Galactic, it is one of the only space travel companies that is publicly traded right now. And if you believe in the future of space travel and commercial space flights, this may be the company you want to take a look at. So their ticker symbol is SPCE, and they're currently trading just over $20 a share. And you can see here on the one-day chart, they are down 13.7%, an absolute staggering decline on the single-day chart. If we move over to the one-year chart, you can see insane price volatility with regard to Virgin Galactic. This is a young company who is just innovating right now and trying to create the first ever commercial space line to bring consumers from Earth to outer space, and they want to be the first company that can do that at scale. So this is a company that's seen insane hype over the past couple months. Shares were trading last year around $7 to $8 a share. They saw insane run-up of gain of over 400%. They saw highs at $37, $38 a share, and then they also saw huge declines where the share price fell 80% back to a more realistic level where it is today. And over the past 6 months, the shares have seen, once again, a huge decline, but have seen somewhat consistent growth over the past couple months, where over the past about 3 to 4 months, the shares are up 100%. So an insanely volatile stock, huge price fluctuations. You see there's been a couple days where the price has moved over 10%. And as you saw today, this was another occurrence of a dip around 13.7% because this company actually missed on earnings estimates. So if we take a look, today they reported earnings and they actually saw a 30-cent earnings per share loss for each share. So this company lost 30 cents per share and had a negative earnings per share of 30 cents. And they actually had missed analyst expectations by 4 cents. So they lost 4 more cents per share than analysts expected. And actual revenue was negative, and they actually only missed their revenue by 0.65 million. So you can see here they missed on both earnings per share and revenue, which of course, when people and investors see that companies missed expectations, usually shows some negative signals regarding the company and may lead to some people selling out or a little dip in share price, which is exactly what we saw today, where we saw this massive 13% decline after this earnings report came out. So today we're going to go over more about what the actual earnings report said and if this leads to a nice buying opportunity for Virgin Galactic. So moving on to this article, it breaks down some of the key points of that earnings report. So a couple of good things is that Virgin Galactic is still trying to fly their founder, Sir Richard Branson, in the first quarter of 2021 after 2 more test space flights. So Richard Branson going out to outer space was supposed to happen sooner, but it has been getting pushed a little bit, so they're aiming for the first quarter of 2021 to send him out to space. The company actually had a loss of $54 million for the second quarter, but this is somewhat in line with some previous losses in previous quarters. And they actually, another reason this share price saw a huge decline is this company is actually going to raise $460 million in the sale of more common stock. So as the company issues more shares to the public, it dilutes current ownership, and each individual share out there right now is actually less ownership of the company, which is another reason what leads to share price decline, because there are more shares on the market, each share becomes a little bit less valuable, and shares and investors usually sell off during that time. So a lot of big news came out over these past couple days and with this latest earnings report. So you can see here, Virgin Galactic shares slipped after the space tourism company reported another quarterly loss, which is somewhat expected with these types of companies, and that it won't fly Sir Richard Branson out until the first quarter of next year. They also announced that they're going to be selling $460 million of stock, which means they're issuing 20.5 million common shares. And at the end of the second quarter, Virgin Galactic had about $360 million of cash on hand. So they actually do have a decent amount of cash within the business right now, which of course has come in from other sales of stock in the past. And this is the money that they're using to continue to grow operations, continue to innovate, and actually do these test flights in order to grow the operation to one day become this commercial spaceflight company that they're trying to become. So there's a lot of other couple key points we want to take a look at. And they did mention how the pandemic we're going through right now has actually slowed their progress in their testing of different flights, and they are still working towards completing other milestones. This company actually saw some good news where even during this economic slowdown, they received another 300 new 1,000 customer deposits. So of course, this brings up their total. This is fully refundable deposits, which is something we have to keep in mind that they are fully refundable, but to over 700 new deposits since February, and it has reported 400 deposits in the previous quarter. So they have about 600 reservations on its books of these $1,000 deposits, and what those really are is it's a reservation for when Virgin Galactic is operational and they can bring people to outer space and back on these commercial space trips and this tourism industry for space. These people are reserving their spots to be first in line for when that happens. And the people who are actually reserving their spots, these are the ultra wealthy people right now, because tickets will be sold between $200,000 and $250,000 per person, which of course is way above the price range for any average individual. So the people who are putting away these $1,000 deposits and reservations have to pay out around $200,000 to $250,000 per person when Virgin Galactic reaches that new milestone. So Virgin Galactic fell around 7% after hours trading once they released this news, but then you could see as of today, the shares continue to decline for a total of 13.7% on the single day. So even though this company is still working, they are still good to see that they are bringing in new deposits and they're still showing interest from consumers in this idea of space travel. And one thing that's very important to point out is there are no other publicly traded space travel stocks right now. SpaceX, Elon Musk company, is still a private company, so you can't purchase shares in them just yet. And there's a couple other space development stocks that are actually not publicly traded just yet. So if you're really interested in getting in early on into the space tourism industry, before these flights are actually occurring, Virgin Galactic is the one you have to take a look at. I'm sure there'll be a lot more price volatility moving forward. And if you plan on holding the stock for another 10 to 20 years, because you have a strong belief in the space tourism industry, then you may see some upside sometime in the future. But of course, you have to do what's best for yourself. And if you believe in this tourism into outer space and you believe it is a market that, can become mass realized and actually mass consumed by a lot of individuals, then maybe this is the company that you may want to take a look at during this 13% dip. A couple other key points of this company is that they released how their inside of their jets and their planes and spaceships are going to look. And they have a nice, sleek, modern design with nice, comfortable seating and an array of different assortments of products that are provided within the cabin. So the stock has seen that huge decline today. So even though the price is trading around $20 a share right now, we're going to take a look at some price estimates to see where investors and analysts believe the stock will be over the next 12 months. The first one we're going to take a look at is this price analyst right now for Virgin Galactic, which shows the stock in 12 months, the average analyst believe is going to be around $24.67. So from where it is right now, that shows a 19% upside. But of course, analyst expectations and estimates are changing every single week, every single month, and no one knows for sure where these are going to be. But of course, it's good to see that some analysts who are evaluating the stock today do see some upside where the stock will be higher in the future at around 20% higher than where it is today. Next, we got to take a look at is the financial statements, do a quick overview of them. Of course, this company is not really operational just yet. They're not really bringing in any revenue, and they're just generally selling shares in order to fund the company and grow the business. We still got to take a quick peek at those financial statements to see what they're looking like. So over the past trailing 12 months, they've generated $1.6 million in revenue. Nothing too crazy there. And overall, they posted a net loss of $246 million. So of course, we saw earlier in this earnings report, they announced that they're going to be selling shares to generate $460 million in cash. And of course, that $460 million is what is going to be used to fund the business, because from their income statement, you can see they are losing money. So they need to sell more shares to generate more income in order to fund operations continue to grow. If we take a look at their balance sheet, you can see here on their total cash, like it mentioned earlier in that report, they have around $360 million in cash on their balance sheet right now, which is a decent size of cash compared to last year. It is a decline overall in the past 12 months because they've actually been, burning cash and growing the business and actually spending that cash to continue to test different flights in order to optimize the entire process. Take a look, they have total current assets at around 415 million. Meanwhile, their total current liabilities that are only at 113 million. This is very strong for these young companies because they have a current ratio above 3, somewhat close to 4, which just shows that they're not going to have any troubles over the next 12 months with regard to debt. Companies who have a lot of debt in the next 12 months and in the short term may have to sell more shares out of the blue just to pay off that debt, which can lead to some financial hardship. The fact that Virgin Galactic has enough current assets on hand to pay off those current liabilities just shows that over the next 12 months, I'm not too worried about the company. Total assets overall of 490 million, meanwhile total liabilities of 136 million just shows that this company does actually not have a lot of total long-term liabilities, which is great to see because, like I said, with these types of companies, if they have a lot of long-term debt that's going to drag down their growth in the future, might be a little bit of a red flag, but Virgin Galactic does not have that, which is perfect, and it shows that this company has the financial, backing right now to sustain operations and continue to grow. So thank you for tuning in, everyone. Let me know your comments down below. We just broke down how Virgin Galactic reported their Q2 earnings and what led to that decline of 13% in their shares. Let me know what you think about the company if you're going to be purchasing them down below. And I appreciate this, and I'll see you in tomorrow's video.